everybody. This is John Blank, and it is August the 25th, 2025, and I am talking about the second part of Cybersecurity Stocks 25, which, as you know, out there in the world, this is a critical infotech group with lots of demand. So we'll go through two parts today: the top cybersecurity stock fundamentals for three style classes. And the second part will lay out the top cybersecurity stocks in a portfolio allocation context, which allows us to study them just purely from a returns perspective, whether we should put them in our portfolio or not. So these are my views. I do have a PhD from MIT, and I are not necessarily the views of Zacks Investment Research. Okay, first off, cybersecurity risk management. Here's a chart with 7 buckets of how to go about risk management in the cybersecurity space. So you can read this at your leisure at some other point in time, but I just want to point out that there's a lot of acronyms in this space. And the first thing to do is to read up on these acronyms and understand them better. For example, intrusion detection system down here, intrusion detection system, IDS. So now you know what that term is, and you can be comfortable with it. Here's another one, CMMC, Cybersecurity Maturity Model Certification, Federal Information Security Modernization Act, FISMA, on and on it goes. So one of the ways to get less concerned about not understanding things is not to have your eyes glaze over. In the face of acronyms, there are principles of risk management, performance management, evaluating cyber risk, and lots of different issues that you can learn about. And doing it will help you read through the company narratives of what these groups do down the road. Okay, we're going to do some top cybersecurity fundamentals for 3 style classes. Large caps will be broken into 2 sets, set 1 and number 2, and then we'll have mid caps and small caps. Here you can see the market cap. We're going to draw the line at 10 billion for large caps and up, and then mid caps will be in that 5 to 10 billion range, and small caps will be billion or less. So you know any of these names? Honestly, you're going to know more of the bigger names: Cisco, Palo Alto Networks, Fortinet. F5 was a name I didn't know. I'll put that one on my list. VeriSign, Checkpoint, of course, I know. Crowdstrike, I know. Cloudflare, I know. Zscaler, I know. CyberArk, Okta, and Akamai, I know. Down here, it's a lot more grim for me. I do know Qualys. I do know Mitek Systems. I do Verint, but I don't know the rest. So that is something I learned from this set of data. Okay, revenue for the top cybersecurity stuff. Here's large caps, set 1 and 2, mid caps, and small caps. Again, like I said, even in the face of that COVID pandemic, all of these security stocks boomed, particularly after the COVID pandemic for CrowdStrike and Zscaler. They're really taking off, and you can see they're really smooth growth. The one outlier is Cisco. Of course, they're a router company that goes way back to the early days of the internet. Got into the security business on the side. Over here, you can see Akamai is actually starting to go sideways. Okta, if you're looking for a growth stock, there is one that's giving you great anticipation of more growth. And CyberArk, which we can see now, is doing well too. Zscaler actually looks like it's kind of tailing off a little bit. And of course, you can go on yourself look through these stocks. It's a great way to just pick up names and understand. Once you look at their Zacks.com portfolio, or their stock perspective, you can get a great deal of understanding about just the top line revenue growth here. Here's the earnings per share. Again, really nice story for Palo Alto Networks. You can see after the COVID pandemic really took off for that company. Fortinet's done really well. Here's Zscaler again, doing quite well. One that's actually pulling back a bit is CrowdStrike. That was because of that big problem they had. If you remember back in a few years ago, they had to shut down systems because of a bug. And now you can see that it did inhibit their performances. Over here, you can see Okta is really doing quite well. Actually, interestingly enough, Akamai, much as people love it, is not as strong with the earnings growth as people might understand. And over here, down in the small caps, lots of names, interesting names to look for that are scaling up and growing fine. Here's one I've had in the large cap trader, Qualys. And of course, it has really quite well. Okay, return on equity. Again, Cisco kind of topped out here, but at a nice return on equity of 26%. Outstanding relative to all the other ones. Over here, you get Checkpoint at the top, 33% ROE, just phenomenal. Qualys, as I told you, I like, and I had in the large cap trader, 37% ROE. Over here, names that Mitek, Variant, of course, other ones, and you can see, again, you can pick up a nice ROE name and look into it, and that is a great way to start off on finding a great stock. Okay, cash flow yield, same kind of pattern here. Love to see stuff like this. FFIV, that's a really nice pattern. Mitek, again, super nice pattern right now. Down here, not so much jumping out at me. Here I've got lots of stories that are holding up well for it, and that's probably the best example of that. And Cisco, of course, pulling back a bit on its cash flow yield. That's been a stable stock. It's just so doggone big now. I think that's probably the problem. Free cash flow to net income. Again, this is always giving you ideas of where to look for. And then when these things are nice and high, that's a really good sign. These businesses are doing quite well. CapEx and depreciation, I'm not going to get into this a lot. It's the same kind of thing. You'd like to see people building out CapEx. And if they're doing that a lot, A10 is an example here. You'd want to look into this. Here's that Qualys story again, jumping out at me. Once again, if you find the same stock ticker doing well in different fundamentals, that's a good sign that you should probably look into that stock as an investor, long-term investor. Qualys is a good name. Okay, here we get the forward valuations. What can we learn here? I mean, again, we want to know within an industry what people should be paying for a stock. And over here, you can see Akamai is at 17, which is a fairly low valuation. VeriSign at 32 is very high. And Mitek down at 15 is actually very low. Variant at 9 is also very low. So it looks like from a valuation perspective, some of their small cap names that are growing are very attractive. When there is a turn to small caps here, if the Fed does cut rates, now you've got a place to go to find names that are doing quite well from a valuation perspective. All right, price to keep free cash flow. Again, most of it's about looking into well-valued names. And again, Variant and Mitek pop out again here down in the small cap space. VeriSign doesn't get a good look from a valuation perspective. Palo Alto Networks at a 65 price to free cash flow. It really does not look good at all. So again, there's ways to look at this from a growth perspective or a valuation perspective. Get yourself the whole balance. I don't know what type of stock investor you are, growth, value, momentum, but you've got a lot of different choices from these stock fundamentals. One more left in valuation, enterprise value to sales. Again, we're looking for names that hold up really well. Down here again, Variant and Mitek do quite well in this context. Always interesting to find ways into stocks by looking at all of these charts. Didn't take us long. That was 10 minutes. And how much did we get from it? A lot. All right, now let's do the cybersecurity stocks in a portfolio context. Number one, the large caps. Cisco, Palo Alto Networks, Fortinet, F5, VeriSign, Checkpoint. Over the last basically 8 years, you could earn 400% annualized returns, 22% annualized on this particular portfolio of just large cap stocks. So you could easily have outperformed the S&P 500 just by owning the right mix of these 6 stocks, large cap stocks. So that risk is actually quite low, as you can see here, relative to its returns. Just fantastic story, and you have to love it. I would look into the correlations here just to show you that some of these names are actually not that correlated. Checkpoint to the others is in the 3s and 4s, which is fairly low, which is, I mean, this is a beautiful story. You got a lot of return and you got a lot of low correlation to the risk. So this was actually from portfolio context. Large cap set 1, excellent. Large cap set 2, a little bit less on the returns, but still 29% annualized for this particular portfolio construction. 23 and 24 also incredibly respectable. And you've got to love, and in many ways, now that I look into it, these sets of these names for set 2 are actually even better than set 1 in terms of these returns. Standard deviation of returns is a little bit higher, but not so much that I would be worried about it. Again, large cap set 1, large cap set 2, you can get 22 or 29% annualized return over the last 8 years if you own these stocks. It's a no-brainer, folks. You just pick up these 6 names, and you're good to go. Over here, annual returns in the mid caps are very weak. So here's a bunch of names. I threw Qualys out there, but the returns are just not there. The people have not been buying these stocks. Now, maybe they do buy them in the future. That's something to be thinking about. That's why the valuation is so poor. People have been skipping these names just based on sheer market capitalization. So the returns are very poor in the mid-cap space, and in the small-cap space, again, returns are very poor. So we learned this already before, that people have been playing large-cap names in cybersecurity spaces and overlooking the small and mid-cap names. Valuations are better on those smaller names, but the returns have been much worse. So I would tend to think that the story is to buy large-cap set 1 and 2 as your best bet going forward. That's it for me. Thanks for attending. I hope you enjoyed it. And you can find all of these slides from us at Zacks Professional Services. We have a Twitter feed at ZA Tools. Please call us at 866-794-6065. Send us an email, strategycall@zackspro.com, or find us on the web at www.zackspro.com. That's the best to get these slides, and these slides are where you're going to learn the most and get the most value in terms of picking stocks, building portfolios, and earning returns. That's it for me. I hope you enjoyed it. John Blank, Zacks Chief Equity Strategist.